With all the volatility in our housing market this year, a lot of people want to know what is going to happen with our housing market this year. So I actually did some digging for you guys and found an interesting article from Forbes. So here's the actual article itself here. It says, the housing market predictions for 2022, when will prices decrease or drop? And this is actually just posted on the 1st of July. So in today's video, I'm gonna be sharing this article here with you guys. And I'm also gonna be sharing some additional insights based on my own knowledge about our housing market right now. So with that said, let's go ahead and dive right into this video here. And here's what they had to say here. Low housing inventory, fervid competition, and massive price gains have basically battered home buyers since 2020. But now rapidly rising mortgage rates are making it even harder to purchase an affordable house. So let's talk more about this. Let's talk about mortgage rates right now. So according to the Mortgage News Daily, as of today, which is the 6th of July, average mortgage rate for a 30-year fixed rate mortgage for people with exceptional credit is averaging 5.65% right now. That's a 2.5% increase compared to 1 year ago when rates were approximately 3.13%. And ever since January of this year, rates have absolutely skyrocketed. But more recently, rates have basically been on a downward trajectory ever since the middle of June, more or less. And in regards to housing affordability or lack thereof, here's a recent article according to the Mortgage Bankers Association. It says here the median principal and interest-only payment, in other words, this excludes property taxes and insurance. So for P&I payments, a typical borrower, this is based on people submitting loan applications to buy houses. So a typical borrower who are submitting loan applications right now is paying $514 more per month through the first 5 months of 2022. And that's a jump of 37.1% in only 5 months. So right now, that median P&I payment right now is basically just under $1,900. This is the blue line right here. This is the median housing payment across all mortgages, at least for conventional FHA, USDA, and VA loans. So right now, the median principal and interest payment right now is basically just under $1,900. But really, ever since January of this year, it's been basically skyrocketing because we had home price appreciation, and of course, mortgage rates have spiked big time as well. So at the beginning of this year, approximately, we were at about $1,400 per month, but now we're about $1,900 per month. Also, over the past really, what is this, 7 years, the average monthly mortgage payment has basically hovered around $1,000 to just under $1,400. So this trajectory right here is obviously not sustainable, and that's one reason why I feel that home sales and potentially home prices could decrease this year. But more on that later because I'm going to be making my revised housing market forecast for 2022. So stay tuned for that. I'll make that video here in the next couple of weeks. And going back to this article from Forbes, it says for many home buyers, higher mortgage rates mean they can no longer afford houses in specific price ranges. So buyers are either stuck waiting for more inventory to come online or moving to a more affordable area. Also, many more are hoping that prices are going to be decreasing, but that might not happen anytime soon. Time will tell regarding this because home prices really have to do with the area you live in. Some markets are really seeing a big shift in our housing market, including Austin, Texas, and Boise, Idaho, for example, also in Provo, Utah. Whereas in other areas, other markets are not seeing these giant shifts in our housing market. So here are some housing market predictions for July 2022. And they basically quote the S&P CoreLogic Case-Shiller Index, which basically showed that home prices increased about 20% nationwide in April. However, though, this is based on old news. This is based on housing market trends back in April. And for whatever reason, CoreLogic tends to have a big lag in their housing market forecasts for the United States here. In any case, they talk about higher mortgage rates and how they rose sharply in May, but they added here, obviously we're seeing higher mortgage rates and those rose sharply in May. However, those big spikes we saw in May are basically leveling off. And according to Nadia Evangelou, who's a senior economist and director of forecasting at the National Association of Realtors, she says that rates should average around 5.7% by late 2022. We'll have to see about this because the latest inflation readings is actually going to be released next week. And if that causes the Fed to pivot once again and raise the federal funds rate by more than expected, that could cause more volatility in our mortgage market. And therefore, it could cause mortgage rates to increase above these levels right here. However, though, because mortgage rates have basically spiked this year big time, that is putting pressure on this housing market. And it says here the Mortgage Bankers Association, or the MBA, recently reported a steep decrease in mortgage applications, and the key words here, to buy and refinance, pushed the market index down to its lowest levels in 22 years. What I really don't like about this quote here is that they're basically talking about what's called their market composite index. This is a measure of people submitting loan applications for refis and purchases. So obviously, refis have basically fallen off a cliff. So instead, what I'm more focused on is their purchase index, according to the Mortgage Bankers Association, because that's an index based on people submitting loan applications for purchases. Obviously, refis fell off the cliff because of rising mortgage rates. So instead, let's look at purchase applications and the latest trends from the Mortgage Bankers Association here. This was actually just published today at the time of this video here, and this is for the week ending July 1st, 2022. The unadjusted purchase index increased 7% compared to the previous week, but the seasonally adjusted purchase index decreased 4% from 1 week earlier. And this adjustment is to account for early closings the Friday before Independence Day. And when you don't include this adjustment for this holiday here, your purchase index increased 7% compared to the previous week, but was still down 17% from 1 year ago. And according to Joel Kahn, who's one of the associate vice presidents at the MBA, he stated the following: mortgage rates decreased for the second week in a row as growing concerns over an economic slowdown and increased recessionary risk kept treasury yields lower. In other words, even though mortgage rates decrease, when you look at the purchase index, which accounts for the Friday before Independence Day, a lot of people had their offices closed on Friday, or they were working half days on Friday. So when you look at the seasonally adjusted purchase index, that actually decreased from 1 week ago. So interesting to see that even though mortgage rates decrease, less people submitted loan applications for home purchases. And Joel Kahn went on to say the following here: rates, or mortgage rates, are still significantly higher than they were 1 year ago, which is why applications for home purchases and refis remain depressed. And going back to this article here from Forbes, it says, will home prices rise this summer? And according to Realtor.com, they actually revised their housing market forecast for the median sales price appreciation on existing houses. That's a long way to say what home prices are going to be doing for existing houses, not new houses. But this revised forecast, which I actually made a separate video regarding this, they stated that their previous prediction was for home prices to increase by 2.9% in 2022, but they actually did an upward revision to increase that to 6.6% this year. And here's Realtor.com's revised housing market forecast that I'm briefly going to touch on because they mentioned this here in this article here on Forbes. So their previous forecast, which I believe was published in December of last year, they called for a 2.9% increase in home prices this year. But their revision, which was published on June 13th of this year, is now calling for a 6.6% increase in home prices this year. They were also calling for home sales to increase by 6.6% this year, but the revised forecast actually went in the opposite direction. They're now calling for home sales to decrease by 6.7% this year, not up by 6.6% in their previous forecast from about 6 months ago. And by the way, if you guys are new here, I made a lot of videos regarding housing market predictions from CoreLogic, Redfin, and Zillow. I'll leave a link below for that playlist here for you guys. And then going back to this report here from Forbes here, they say, of course, we have rising rent prices and now higher mortgage rates, and that has caused many people to be priced out of this housing market. And this has also caused home sales to decrease this year. So according to the National Association of Realtors, for the fourth month in a row, existing home sales have actually decreased. We're now down 8.6% from the same time period last year. This is the most recent stats we have from the National Association of Realtors that was posted for May. And if I had to guess, I would imagine that home sales are going to be continuing to fall later this year as we have a seasonality in housing market, as home sales tend to decrease in the summer months. But also, I imagine that we're going to see a big decrease in home sales because of a lack of affordability in the United States right now. And they actually touch on this lack of housing affordability in this article here as well, because they say here housing is now within a whisper of record low affordability. And it says here, according to Black Knight, even modest increases in either rates or home prices would push us over that line. This quote here, which is from the president of Black Knight, which is a data analytics firm, is actually an old quote here. But the most recent report that we have from Black Knight actually does show a record low housing affordability in the United States right now, hitting a 35-year low. And it says here, housing payments are now higher as a percentage of income than the previous peak that was set in July of 2006. And of the nation's 100 largest markets here, 72 of those are now the least affordable that they have ever been since Black Knight started collecting data way back in 1995. So here's some housing inventory predictions for 2022. It says here, Realtor.com basically revised their housing market forecast for housing inventory. So it says here that Realtor.com actually made a big adjustment to their most recent forecast for housing inventory. And let me share that with you right now. So the previous forecast, which I believe was published in December of last year, was calling for inventory to increase by only 0.3% compared to 2021. But the revised forecast, which again was published on June of this year, is calling for a 15% increase of housing supply compared to 2021. What's interesting about this number here is that their forecast is calling for a 15% increase. Again, this is about a month ago, but their most recent stats that we have, which is actually published on June 30th, states that active listings for the week ending June 25th compared to the same week in 2021, we're now at 25% more houses for sale compared to the same time period 1 year ago. And also, as I mentioned in a previous video here, I've been making these housing market updates according to Realtor.com for several months now. But at the beginning of May, this number here was basically 0. So basically, we had the same number of houses listed for sale at the beginning of May of this year compared to the same time period last year. And now we're up 25%. So basically in 2 months, we went from 0% all the way up to now 25% gain in active listings compared to a year ago. So it just goes to show how their housing market predictions can change. And of course, it's very challenging to make accurate housing market predictions over the next 12 months here. And based on a recent article from Realtor.com, they basically stated that the number of houses for sale is expected to continue to grow, building on the turnaround that begun in May of this year. So should you buy now or should you wait? This is the ultimate question. And as they mentioned here, it's a highly personal decision. So whenever someone asks me this, should I buy a house right now? I always ask them, do you have a stable job? Do you have an emergency fund of 3 to 6 months of your expenses? Do you plan to live in the house for an extended period of time? I would say do not buy a house unless you plan to live in it or at least own it for at least 7 to 10 plus years to ride out any ebbs and flows of our housing market. And it says here, trying to time this housing market or predict what's going to happen next year is not the best home buying strategy. Instead, it's better to buy based on your budget and needs. So if you find a house you love, and it's also an area you love as well, and it also fits your budgets, then it may be right for you to buy a house. However, though, if you make too many sacrifices in order to just buy a house, you may end up with buyer's remorse. If you do decide to buy a house, here's some tips according to Forbes here. It says start with a budget and make a pact with yourself to stick with it. One thing I want to mention regarding this as well is that you should talk to a loan officer. You talk to a loan officer, get pre-approved for a loan. They'll tell you the maximum loan amount that you're pre-approved for. But don't necessarily just go with this number though, because if you're pre-qualified for basically a $500,000 house, that's the maximum you qualify for, it doesn't mean you should be looking for $500,000 houses. My advice to you guys is stick with the budget you're comfortable with and not necessarily just go with the maximum amount that you're pre-approved for. So please leave me a comment below with your biggest takeaways from today's video. Also, if you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day. I look forward to seeing you on the next video.